some could see their unemployment benefits plummet by more than 70%. For more, let's bring in Ernie Tedeschi. He's policy economist and head of fiscal analysis at Evercore ISI. He also served as a former senior advisor and economist for the Treasury Department under the Obama administration. It's good to have you, Ernie, and welcome. And first of all, you're talking about a 2 percentage point drag on GDP?
That's right. So
wow.
you can think of that. You can think of that as, it sounds like a small percentage, but you can think of that as a typical pre-COVID year of GDP that we would lose as a result of not extending this.
Yeah, I don't think it sounds small at all. That we can ill afford to lose that. So, there are various proposals underway about maybe trimming the benefit by, going from $600 to maybe something a little bit less. So the only reason it's at $600 in the first place is because the jobless benefit systems didn't have the technology to just replace the wages that people were making, which was the goal here. So what levels to you would kind of achieve that goal? And how long should it be extended before it does more harm than good for the economy and for these workers?
Well, I think the smart thing to do would be for Congress to find some way to keep generosity constant. Maybe finding a way to address concerns about job finding while still maintaining that. If emergency unemployment insurance, if the $600 a week goes away entirely, that's $18 billion a week in federal support that would disappear. And as you showed earlier, if you're a worker receiving unemployment insurance benefits, then overnight your pay would essentially go down by 50 or 75%. So that would be a major drag on the economy.
Although I believe there are some various state programs where you can extend that benefits receive some level. Of course, that'll start to vary a lot depending on where you live. Did you look into optimal responses here? I mean, so what would your analysis point to as what Congress should do next?
So we looked at two things. We looked at the macro benefit from this extra spending. We also dug, into the jobs data with a microscope to see if there was any evidence that the extra benefit was having an effect on job finding, which is the primary objection that you hear to this emergency response. What we found on the job finding front was really interesting. There's no correlation between the generosity of someone's benefit and whether or not they found a job in May or June. Doesn't mean that it hasn't happened in isolated circumstances, but it does mean that there were lots of people who had very generous unemployment insurance, maybe even getting paid more than they got paid in their jobs before, and yet still took a job in May or June. So I think that, the risk of cutting this macro benefit too early that is clearly helping consumption, the economy overall, right now outweighs the risk to possibly job finding from having UI benefits that are too generous.
What about some of the other ways to get cash to households, basically? The payroll tax cut obviously applies more if you're working. But obviously on the employer side, a payroll tax cut, that does equate to savings for the employer. They could use that to hire people. We also have the option of direct checks. There's been a lot of overlap between those who are receiving checks and some who have been on unemployment benefits. So is there another way that a government program could help people who are displaced by COVID?
So I think that unemployment insurance is a particularly good, well-targeted program because it goes to people who need the money. And prior economic evidence has found that they have a high likelihood of spending that money. So that means that for economists like me, we see a lot of possible stimulative effects from UI spending. Checks and payroll tax cuts can have an effect as well. The problem with payroll tax cuts are twofold. Number one, employer-side payroll taxes are already deferred for 2 years, up to 2 years under the CARES Act. So you could cut businesses' ultimate tax liability if you wanted to, but that may not help liquidity in the very short term. The second thing is that you obviously have to be employed to see a benefit from a payroll tax cut, either from the employee or the employer side. So if you're one of the 30 million people currently receiving UI benefits, that by definition doesn't help you.